Welcome back to everybody else who's just joined on the live stream. So we have just heard Jean-Pierre from Kerstin Afjoknik on the ECB Supervisory Board. She has told us a little bit about some of the relief measures that have been in place in Europe during this COVID time. But of course, we're very keen to hear the experience within the banks themselves. We have around 100 banks represented through their chief internal auditors online today. So I would just like to introduce you. As I've mentioned, we have Jean-Pierre Moustier. Jean-Pierre is the Group Chief Executive Officer at UniCredit. He has been in that position since July 2016. And prior to this, he held other executive management posts at UniCredit during 2011 to 2014. And this included his role as the Deputy General Manager in charge of the Corporate and Investment Banking Division. And as such, he was also a member of the UniCredit Executive Management Committee. And prior to this, as many of you may know, Jean-Pierre spent the majority of his career at SocGen, where he worked from 1987 to 2009, primarily within the Corporate and Investment Banking Division. He's held numerous positions there in various markets and financing activities in Europe, Asia and the US, and he was also appointed head of SocGen's Corporate and Investment Banking Division in 2003, and was also a member of the bank's executive committee. Jean-Pierre is also the president of the European Banking Federation. So who better to perhaps share some thoughts with us on the current situation for banks in Europe? We will hopefully have a little bit of time for a more active Q&A with Jean-Pierre. So as I've mentioned earlier, we have Slido. So if you have any questions for Jean-Pierre, please do put those in the Slido and they will come through to us. So I would just like to say a huge thank you for joining, Jean-Pierre. We know, it's a very busy time of year and very busy time in your calendar as well. So we really appreciate you taking some time out of your day to be with us. We're honored to have you here and to get your thoughts. So I'd like to hand over to you, Jean-Pierre. Thank you again.
Thank you very much, and apologies for being late. I was actually on time, but to manage an operational risk and could not find the right password to join the meeting, actually. So apologies to all the participants. And so let's go into the core of the issue. I mean, let me comment about, the impact on, COVID on bank activities, basically, or challenge for European banks. Maybe the first thing which I think is important to note is that we are in an environment which is creating stress on everybody. I mean, of course, on the health system, on the population, on the regulators, on the state, and on the bank. And so we have to make sure that we deal with all our stakeholders as a bank. And the stakeholders are the client, the employees, all the different communities with which we interact, and of course our shareholders. And the only way to be able to take care of all our stakeholders, so to a certain extent, but the term might have been overused a little bit, is to move from shareholder to stakeholder capitalism, which is going to be more and more important. And the only way to converge and have, the same interest, being dealt with for all these stakeholders, is to make sure we have a long-term view. And that banks take a long-term view and not a short-term one, basically, about what they do. And clearly we discussed that it will be important as well in terms of management of risk and medium-term impact on the different actions we take. So I think that moving towards a long-term view of what we do will be key. And how do we do that? I mean, I think that what will be extremely important is for the management of banks to have a long-term view, and so for their incentive to be very, very long-term and not short-term, specifically, in such a COVID environment. So what I did at UniCredit, and I think it's important, even if it's difficult and painful, is to make sure that to incentivize the management to be long-term, we have a very long-term remuneration. On my side, I have 0 cash bonus and only a long-term incentive plan, which is a 9-year one. So where, when it vests, I have to own the shares for 9 years. So you go through a different cycle, and you have clearly an impact. You can see the impact of what you do in the medium term rather than taking short-term actions, which maybe not proper fixes. And so if we move and use this long-term view, clearly we see that COVID has an impact on bank profitability, as rates will be lower for longer. And the impact of COVID on the lockdown is a one-off on fees. We have a lockdown, clients cannot move, so we do less business. That's okay because it's one-off. But if you have a more structural impact, and clearly we have seen in continental Europe that the rates are going to be lower, which they are now, but short-term with long-term rates and for much longer. I mean, the net interest income is structurally impacted, and it's made of many different components which are structurally impacted. And so, what will be important for the banks is to find the right way to deal with this structural impact on their profitability, because their top line, will be lower just because of the lower negative rates, basically. And the long-term view of management is important. You can fix a short-term, NII impact by, doing volume lending, doing carry trade. That's very short-term, creates more risk in your balance sheet and does not solve the issue. So, even by dealing for the, this impact of COVID, management needs to have a long-term view and resist the pressure of short-term fixes, which actually will make things more difficult in the medium term. And of course, if your top line is under pressure, cannot grow as much as you could, or even, some of the elements of the top line might go down, you need as well to work on the cost side. And, cost optimization is one thing, but the cost optimization, and I think banks now have understood that more needs to be done, can not only be done by taking the fat out. So in other words, when you're fit, if you keep cutting, you might actually cut the bone, and that is not, very adequate. So the bank have to accelerate their own transformation to be able to be more efficient for the transformation towards more remote banking. And I'm using the term remote banking and not digital, as it is really what is important. Our client change, and by necessity rather than by choice with COVID. They cannot go to the branch. The corporate clients cannot have, a physical meeting anymore, at least with their bankers. And so we need to develop more remote banking. And one of the product which were the most impacted by the lockdown, it was actually our call centers. We've seen during the lockdown the volume of the call centers more than triple in a matter of a few weeks. So making sure that we can have enough resources in the call center, that the client waiting time can be managed and equivalent to the pre-COVID area of few seconds rather than tens of minutes, has been extremely important. And so remote banking start with the traditional banking activity, meaning call centers, remote advisory, and of course, the digital or internet connection and the ability to operate in digital contract, paperless contract, then digital. And the banks have to review their processes, but it needs to start through the client service model, where you will be able to deal with the client on a more remote basis. And then you can look at simplification of products, simplification of process, automation, then efficiency under a constraint of client satisfaction, as banks have to react as well to the threat, if I may say, or the push of very narrow competitors, maybe the neobank, the fintech, we don't have the breadth of services, but on their very narrow field, because they are simpler, could offer product which could have a better quality of service than the wider range of product offered by the bank. So, a lot of change in terms of the bank evolution, in the way the bank are working, and in the process for them to optimize their efficiency, which is not only a top-down cost-cutting reduction, but much more a bottom-up process-driven efficiency management. I mean, there are a lot of comments about, but to cut the cost, you should merge. I mean, the answer, I think, is no. I mean, to cut the cost, you need first to optimize your process, and this cost optimization is going to come through transformation of the process. So if you go into a merger, the team members and management team is going to spend more time for integration rather than transformation. And I think the transformation is more important than the integration. So actually the cost efficiency are coming more through the transformation integration. And you can reduce costs on a standalone basis. At UniCredit, we cut more than 20% of our workforce in Western Europe in our previous plan, which ended up in 2019, and 25% of our branches. So you don't need to merge to cut costs. You can do that. And a merger will add more branch, more FTEs in your system where you want to cut branch and you want to cut FTEs. So you have a step back, basically. So your management focus is moving from transformation to integration, and you end up doing exactly what you don't want to do, which is to have more FTEs and more branches. And that's for the operation side. And a merger is not a panacea either on a financial point of view. As today, banks usually have excess capital with the different action they took. Trading at a sharp discount to tangible book, average European banks trade at something that more than 50% discount to tangible book. You don't want to use your excess capital to finance a merger where the EPS accretion after 3 years might be at best lose a double-digit percentage, when you can have a very high EPS accretion if you do share buyback when you buy your shares at a low level. So in fact, use of excess capital should be today more for the share buyback than for any integration, which brings a dubious EPS accretion. So this is why from time to time I say that we might have passed the reversal rate, and with more negative rate, from time to time, it could not make sense for the banks to lend more because of the conditions or the profitability of additional lending, while it could make more sense to actually buy back shares when and if the regulator will allow that. So of course, the banks today have excess capital to lend more to the economy and to support more the economy, which we are doing. That's our mission and that's our goal. But we have to see that in a current environment, the dynamic has to be looked at very, very carefully, as the best use of capital might be shifting if we go towards an extreme in terms of additional actions to be taken by the ECB. The regulator in the COVID environment and the states have been taken, dramatic actions which have been extremely efficient and decisive. Not only in terms of fiscal policy, I'm not going to cover that, you all know that, and also from a regulatory side, and they've been working hand in hand. So really, it has been an outstanding, actions by the regulators. And that might come to an end with end of moratoria. Some of them have been extended. End of the government guarantee loan, some of them can be extended. There might be new developments. The guarantee loan, for instance, by the governments, have been providing unbelievable liquidity to companies which needed them. Of course, today, the point is not a liquidity issue for most of our corporate clients, but a solvability issue, specifically in a second wave. And it could make sense, and we are discussing with government, to move from government guarantee loans, which are senior, pari passu with others, to maybe transform these loans into more subordinated holding, which can provide equivalent quasi-capital to the companies which need them to help them go through the crisis. We move from a liquidity to a solvability crisis, and some actions can be taken. It is a crisis, health crisis, and there is, of course, always the say which might have been overused. Banks are not part of the problem of the solution. Yes, the banks are here. They are lending money, government guaranteed money, or non-guaranteed money to their clients. We are doing that at UniCredit. We are very, very focused to help our clients and to use our capital and our setup to help our clients. At the same time, it's important to maintain a very, very strict risk discipline in terms of having a long-term view. And I go back to my initial point about how to manage the risk. Credit risk for sure, and to be extremely careful not to put the wrong asset in the balance sheet, which might not have the right risk reward, basically. But also managing all the risk beyond the credit risk in terms of operational risk, and more than ever, before COVID, AML risk, sanction risk, compliance risk, cybersecurity risk, were absolutely key and important. And, we all have paid fines, which have been extremely high. I would say post-COVID, it's even more important as, we work more remote and, there might be, a slight worsening from time to time of the processes. So to make sure that, we keep an extremely strong focus on the risk management is fundamental. And we're working that under the, let me say, the push as well of the regulator. But there, we have seen a different development as well in terms of optimization of the control and the process, and where actually compliance on one side and audit on the other side can bring a big discontinuity in the way they operate. I mean, not only to improve the processes that they are working on, but also to find new grounds. And I've been discussing with our head of audit, Renela Kandia, on what can be done. And Renela has pushed actually very clever ways to develop using machine learning and or data lake to develop more, a more real-time and bank-wide audit. We put at UniCredit, with the help of Palantir, this US data company, very quickly, within few months, a data lake on all our database. If we had done that by ourselves, it would have been taking years, basically. But Palantir has extremely efficient system, and they are very good data analytics engine. So when you use Palantir, you can operate within a data lake and data analytics engine. And the first use of that is actually not so much for the marketing, but much more for the control function, the risk management side. And we are working on a specific automated process in risk management, not only for the risk approval, but more as importantly, for the risk monitoring, the compliance side, and we've been working on that as well, the compliance side, and for the audit, and to move from point in time sample-based audit, which is audit of the 20th century, let me say, towards real-time group-wide audit using data analytics and data engine is actually extremely important, and will be, I think, quite a discontinuity in the way that audit can be managed. And for instance, the development that has been put in place for us, we had an increase of more than 56% of remote audit during the last 3 months. So clearly we can see that there will be an evolution and a discontinuity. Clearly we need to focus on new risk, cyber risk in post-COVID environment, which is always an important risk, is going to be even more important, if I may say, and then audit can play its part. There are other risks which are important, for example, government guarantee loans, to make sure that we avoid the fraud. We have seen an example of fraud, for instance, in the UK, where it can be everywhere, that we manage properly all the information to be able to access the guarantee. And there as well, the use of audit, not only as a regular audit, but as a help to the business with what I would call focus or snap audit, which can be done, to check very quickly if there could be an issue which can be rectified very, very quickly. We need to be extremely proactive. We'll be going through a massive transformation in terms of the principle of organization, but also the dynamic between audit and the business is evolving, and we see something which is very, very aligned in order to deal with the current environment. I have commented about the move to more remote banking for the client. We clearly, with the new COVID environment, have more remote working as well. And I would say in the second wave, it's going to be even more the case. And there, we have a risk, which is that we create a two-speed bank. One is the colleagues in the branch, which have to go to the branch and they are in front of the client, so they are the most at risk. We call them our branch heroes, basically, and we stay in close contact with them. I have 2 to 3 calls to colleagues in branch per day, using WhatsApp to FaceTime with them and to give them our support. But the new way of working for people in our headquarters, I mean, today we have a very, very low number of people in our headquarters working with me. I think there's only one person on my floor today. And we were, targeting to have up to 50% coming back to the big buildings. Is going to be much lower for longer. At target, we feel that we could have at least 40% of remote working structurally. So clearly, this new way of working will mean that new needs as well in terms of control with all our colleagues and the way we operate. And maybe just to conclude on the long-term issue, if we look very long-term and sustainability or doing the right thing at UniCredit, we have two values, ethics and respect, and one principle, do the right thing. I think COVID has raised as well the perception of clients and also employees about doing the right thing and how do banks behave properly in any aspect. Put health and safety of the colleague as a first priority beyond anything else. Revenues, profitability, health and safety is the first priority. Proper interaction with the client, supporting the clients in this difficult period, but also supporting the environment. And if I'm a little bit cynical, if there is no more world, there will be no more banks. So as a feeling of self-preservation, we should make sure that banks do the right thing as well in terms of ESG. And I think COVID is putting the topic even more forefront, basically, for our team members who want to work in an institution which does the right thing in the current environment and beyond, for our future team members to attract them and for our clients. So the long-term vision that we have to have in terms of development, the way we work with the client, with the team members, etc., encompass as well our interaction with our environment, and we need to be super focused on that as well. On this word, I'll just conclude, and very happy to take any specific question if you wish to.
Excellent. Thank you very much, Jean-Pierre. That was a great overview, I think, particularly on the strategic side of things and your views around consolidation, the use of excess capital, cost optimization. I think things that all banks have been thinking about. So if you have any questions for Jean-Pierre, we have a few in already, but please put those in the Slido box. But in the meantime, I'll just start with the first question, Jean-Pierre, which is, COVID-19 was not expected, ? I guess perhaps Bill Gates expected it, but no one else. What did you learn most from this crisis so far? So perhaps either personal reflection or even about your organization. I guess many of us have learned different things during this time.
Yes, I mean, COVID-19 was not expected, that's for sure. But what is expected is that we can have black swan scenario, basically, and they can happen anytime. You mentioned, the most I learned about me as a person and as a professional, was in a previous bank at Société Générale when we had the massive fraud, the Kerviel fraud, quote unquote, and where I was, overall, supervising with a many hierarchical level between me and the individual, the activity which created the problem. So that you're, not very far from a massive unexpected risk. And I think the lesson learned from this issue, but I think lesson learned from COVID is that you always have to make sure that you can manage your operational risk extremely well and plan for the unexpected. And and then you can handle an issue, and then you need to react extremely quickly. At UniCredit, we were planning to have a more capital distribution to our shareholders. So last year we sold 7 billion of assets, and we never had in January 2020 such a high capital buffer and high capital situation. We did not use it to distribute capital to our shareholders, but we use it to lend more to our clients and to support the economy. So rather lucky than good. But to a certain extent, you learn that banks need to be extremely disciplined in risk management and always plan for the worst outcome. And in terms of capital, in terms of liquidity, to plan forward capital sensitivity, to plan forward liquidity, and to plan forward any kind of operational risk. And we have at UniCredit, a very, very strong focus of operational risk, probably, because of my past experience, if I may say, and we put that at the top of, the agenda of many of our managers, making sure that the team members know that we pay attention. I personally review audit reports where we have unsatisfactory audit report. I follow the remediation actions. If some of them are overdue based on the criticality of the audit report, I ask the team members to come and present directly to me why they are late and what they commit to do personally in order to remedy and be on time. So I think COVID is another example of what you do in order to manage an institution, plan for the unexpected, and make sure that you manage your operational risk very quickly. But COVID has taught us something slightly different as well, beyond this traditional management of a bank, if you want, which is that we need to learn to work in a different environment where you see your colleagues mostly through a screen. I'm in the bank today, but I have a call with my colleagues 2 floors below through the video because we don't meet. So at one stage, human beings are, programmed, if I may say, their DNA is to exchange in person. And so to keep the human contact and to keep a personal touch with everybody, of course, with my direct contact, with my direct team, but also with all the team members anywhere in the group, and to make sure the managers do that, and we do that, and we keep the bank culture, alive by, making sure we keep an emotional content in what we do is very important. And as I said, after this call, I'm going to have 3 calls with colleagues, one in Serbia, one in Romania, and one in Germany, or in the branch. I'm going to say hello to all the branch team members. And that is extremely important. And I think COVID taught us as well, to deal on an emotional component with the team members, which I think is extremely key in order to maintain the culture of an institution.
Great, thank you very much. And I think that's very, very sound advice for all of us. I can see we have another question here. You talked about the journey from, I think you described it as shareholder to stakeholder and the long-term perspective. Just a question on internal audit and whether you think internal audit, has the long-term view or has the capability to really look forward in the long term. We know, of course, you have an excellent chief auditor at UniCredit, who some of us know. But I mean, in general terms, do you think internal audit has a role to play in helping banks to really plan for the long term?
Yes, I do. I mean, of course, I would not be, commenting here today if I was saying the opposite. So, no, but why? Because we are, going through discontinuity, and so internal audit has to, help us as well to manage this discontinuity. As I mentioned, Serenella put in place, very innovative, from my point of view, ways of handling our remote audit and looking at a certain number of issues. And what she did actually had very positive impact on the way we were looking at the risk from some of our businesses, actually. So, in fact, the way audit look at things can be used positively in order to see how some of the businesses can evolve. And the case was more about credit risk management, basically, which she audited on a specific business. So I think internal audit is not only, if you want, a static control function. It needs to be dynamic in the way it evolves today, to move from point-in-time sample-based towards group-wide real-time, basically, which will be the natural evolution. To help on some of the stress period, to have this spot audit in order to make sure that the business has completely handled all the issues which might be needed to be handled. And looking, for instance, government guarantee loan, we had an extremely proactive interaction between the business and audit, not writing a formal audit report, but having an audit review just to make sure things were handled properly, which has long-term consequences, of course. But audits, can work with the business. We have a separation of duties as well. Remember, work with the business to identify a certain number of risk and make sure that we're going to handle them and deal with them properly. So I do feel that audit has the same evolution than others. And audit is actually a very good training ground as well for our team members and for team members who are working in the bank, developing their career, to have 2 to 3 years in audit in order to be exposed to many, many different types of issues, many different types of risk, for activities, is actually an excellent training for them to go back to the business or other activities. So we need to think about audit as a full component of what we do, and as something which is part actually of the career of all our team members, and which we are doing.
Thank you. I think we have one last question. I think just bearing in mind that we would like to ensure you get to your next meeting. We have a question that's popped up here as well. So, in respect to environmental issues, where do you think banks can have the greatest impact to minimize the CO2 footprint? Interesting question. You touched on sustainability earlier, so
yeah.
what's your perspective?
Well, I think first of all, sustainability is E, S, and G. So we are going to speak about E in 1 second. But I think it's important to not to forget the S and not to forget the G, for instance. And I'm very happy to report that UniCredit has been voted the best social impact bank in Europe this year. We have social banking initiative that we launch and where we extend credit to socially excluded, banking excluded institution, social entrepreneurs, micro entrepreneurs. We extended more than 100 million euro of loans to this year, and we keep doing that. But on the E side, there are two topics, if I may say, which have to be dealt with. Of course, we have to make sure that our own CO2 footprint is, properly handled, and that we are carbon neutral. But I would say it's a small drop, to be carbon neutral for our own activities when compared to the impact our loan book has on the environment, as we lend to companies which are green company, but we can lend as well to brown companies which are in transition, or we can stop lending to brown companies which do not evolve, basically, and should not operate in the way they operate. And so there is not only, if I may say, strategic decision in terms of allocation of our loans. We are exiting fully the coal activities, and we actually have the tightest commitment of any bank in terms of coal financing and exit of coal financing, or funding of clients which might have some coal activities which needs to be run off, or we exit them in terms of financing. But when you do that, and you have spot actions, and what is very difficult to do is to measure the quantitative impact that a bank can have, because I tell you I'm doing that, so that's fine, but how do you check that? And how do you compare what a bank is doing versus another one and the impact? And so we have launched with the European Banking Federation, the Institute of International Finance, an initiative to see if we can measure the carbon footprint of a bank balance sheet. So not our own CO2 emission, but the CO2 emission linked to our bank lending, basically, and see if it can evolve in the right way, and then define targets or compare between banks, what banks are doing. It's an extremely complex topic. Some of the Dutch banks, for instance, are ahead of the pack and have defined methodology. The methodology are not very easy to put in place, but I wanted to make sure that we can progress as well at the European level and international level to see if we can do that. So specific actions for the bank, specific actions as well in terms of client and capital allocation, but as importantly, proper setup in order to monitor the carbon footprint of banks, so that we can really have a quantitative target to be compared between banks and to be achieved in the foreseeable future.
Excellent. Thank you very much, Jean-Pierre. Now, we promised we would let you go by 1:15. We know, as you mentioned earlier, you're keeping in touch with all of your colleagues remotely today as well. So I'd just like to, on behalf of the ECIIA and all of the chief auditors of the European banks, of which we have 100 or so online today, thank you very much for taking the time to talk to us. It's certainly been inspirational to hear the more strategic perspective, also what's happening on the European banking front in respect of ESG as well there. So thank you very much for joining us, and we wish you a good rest of the day.
Thank you very much. It was a pleasure for being here with you. Once again, I apologize for being late, an operational risk which I didn't manage properly. So Audit will work with me in order to do that. Thank you very much, and have a good conference. Bye-bye then. Ciao, ciao.
Thank you very much. Yeah.
Ciao, ciao.
Okay, well, that was it. I certainly found that personally very interesting to hear from Jean-Pierre. I was quite interested on his views on consolidation in the industry and why maybe that's not the right answer, use of excess capital, strategic perspective. Also, I think it'll be interesting for us to follow up on the how to measure the carbon footprint on the bank's balance sheet. Well, that actually concludes the morning session. So we will be starting again very promptly at 2 p.m. CET. So please do join us a few minutes before, just so we can get a prompt start. We'll also be using Slido again in the afternoon. So if you haven't quite mastered Slido, please check that out during your lunch break, www.slido.com. And the code is ECIIA. We will be doing some active voting in the afternoon, so it will be good if you're ready for that. And so with that, I hope you have a good lunch, time to digest both the thoughts from this morning and hopefully a good lunchtime snack. And we will rejoin at just before 2 p.m. CET. Thank you very much.